in listen-only mode.
Welcome to this webinar. I'm Devarsh. My colleague Tarang is not available today, so I'll be conducting this webinar. So the flow of the whole, yeah, Shyam, you can keep yourself in mute, please. There is a lot of noise from your line. Yeah, thank you. So the flow of the webinar is like this. First, I'll go through the presentation, and
हाँ अपने
then
को थोड़ी अच्छा
Shyam,
yeah देवश में continue
yeah, your lot of noise is coming from your side. Please keep yourself on mute. Yeah, thank you. So let's start the webinar. So last week we were bullish on the market. We asked our investors to keep 17,300 as the stop loss. Again, we have seen that the markets have actually seen a lot of short covering on Nifty side. The open interest has gone down by 5% and Nifty has gone up by 2.25%. Similarly, we were bullish on long Nifty, Bank Nifty, and Bank Nifty has seen about 80% rise in the open interest. Massive rise in open interest and massive addition, 4% outperformance. So we continue to like Bank Nifty and Nifty. In fact, we think that these indices can continue to remain bullish. Now, if you were to see the option distribution, there is a lot of open interest on the Nifty 17,500 and 600 put option. So this is the level at which if there is any negative development, market will find support. So for tomorrow, the upper and lower range should be between 550 to around 17,900 or so. If market were to go down to 550, you can create long position for tomorrow. And for this series, continue to remain bullish with the 550 as the stop loss. Around 600, 600 and 700, a lot of open interest has been written today. So that suggests that there is not much downside left in the Nifty for tomorrow's expiry. So around 550, we can find support and it is likely to head higher from there. What are FIs up to? So when we look at the FIs data, still about 35% of the positions are only short side. So for every long, they have much more short positions, and net they are still quite bearish on the market. And this is what gives us the confidence that they will have to cover this short if market continue to move higher, and this short covering can continue. From 0.17, now the ratio has gone up to 0.35. So this suggests that the FIs are gradually covering their short position, but there is still much more shorts to be covered in the derivative side. So overall, short covering is likely to continue in Nifty futures. The put call ratio has started rising from 1.12 to 1.25, and this gives us the confidence that the markets are headed higher. Put writing near 17,500 to 600 levels suggests that that is going to be the support. Oversold positions of FI, call buying and put writing by them in the index future, all these indicates that we should continue to remain long. Last week I gave you a stop loss of 17,300 level. Market found support there and bounced back about 500 points, and we went to as high as 17,800 in this series. Again, now we can raise the stop loss to 17,500. We can see that as the stop loss now, and once we cross the 17,800 hurdle, we are headed towards 18,000 level. For Bank Nifty, again, remained long. Now stop loss has been increased to 41,000 level from 40,500 odd levels. On higher levels, we can see 42,000 to 42,200 also. Here, when we see the open interest, 41,000 and 41,500 puts have been written. On higher level, 42,000 calls have been written. So once we cross this hurdle, there could be more short covering. On declines, 41,500 to 41,000 will provide us the support. Various sectors, we see that the long buildup is seen in the capital goods, finance sector, oil and gas, and power. So if you are looking to add some positions, these are the good four sectors where you can look at stocks apart from Nifty and Bank Nifty. So capital goods, finance, oil and gas, and power. These are the four sectors where we see a lot of opportunity. So to sum it up, we are bullish on the markets. We continue to feel that the market can head higher. For this series, for tomorrow's expiry, 550 should be the level at which you can create long for tomorrow. For the overall series, increase the stop loss from 17,300 to 17,500 and continue to remain long. Bank Nifty has outperformed as we expected. This series also we are bullish on Bank Nifty, but positions are likely to be more on the bullish short covering can happen, and bullish view is more towards Nifty than Bank Nifty. So that's what I wanted to share. Now, if you have any question related to Nifty or Bank Nifty or derivative positions, can you please put the questions in the question mark window? Depending upon the screen you are using, you will be able to press the question mark and the window will pop up. You put your question there and we will try to answer as many as possible. So I'll wait for a minute for the question queue to assemble. Okay, Saurabh Kothari is asking, how do you check the long and short build up in the sector wise? So the data is available from the NSE website in the form of bow copy, and you can download that bow copy and accumulate those information depending upon the derivative stocks which are there. Otherwise, if you want to use various portals like our Pro Terminal, there you can get this information, and there are also paid softwares available in the market where you can see this information. Mr. Srinivas, I cannot answer a question related to stocks directly. Mr. Srinivas B is asking, but overall, my view is bullish on the banking sector. So that should be suffice to give you a hint. I cannot answer question, Mr. Samir, regarding the individual stocks in this webinar. Mr. Ramesh Babu Jairam is asking, what will be the impact of Fed meeting today? Is 17,400 level writing to be maintained? Yeah, so if you are looking to create bullish position, one way to do it is through right options, put options. And if you want to create bullish bullish position in Nifty, 17,500 and 17,400 puts can be written. We feel that the markets will find support there. China and Fed outcome impact. So it is like this. The Federal Reserve is likely to raise the interest rates. Markets have now started discounting two more interest rate hike, one for the next one, which could be 50 basis points, and after that 25 basis point, and they are data dependent. There are now almost 50% chance that there could be interest rate hike in June also. But that means right now we are in March, so April, May, and June, there are 3 more months are left. Usually market starts discounting such things from 3 to 6 months in advance. So markets have already started discounting, and we have to look beyond the June expiry. Overall, markets have found support near 17,300, so and bounce back nicely. For shorter term, our view remains bullish on the market despite this Fed and China developments. So continue to remain long with the 17,500 as the stop loss. That would be my advice. Ankita is asking, can you explain about creation of hedge position and how to exit them? A bit confused here. So hedging is basically a method which is used to create a position which is contrary or opposite to what you existing positions are there. So suppose you are bullish on the market and you have expressed that bullish view using Nifty futures. So suppose you have gone long on Nifty futures. Now you are worried about the market, that what if market goes down? So simultaneously, apart from going long on Nifty futures, you create a bearish position using Nifty put option. So you buy Nifty put option, you pay about 2 to 3% of the Nifty as the cost. So in that month, you are hedged beyond a fall of 2 to 3%, whatever is the premium you have paid. So for example, so for the sake of simplicity, let's say you have bought a Nifty put option at the money and you have paid about 2% as the cost for premium. So anything beyond 2% fall in the Nifty, you are hedged. So that is called a hedging position. Now, many times people create individual stock future long position and hedge it with using Nifty put option or individual stock options also. There are people who trade individual stock futures. They create long position in stock future and hedge it within by going short on Nifty also. So these are the various methods available in the market to create a hedging position. It all depends upon your uh, risk appetite and your level of bullishness on individual uh, position which you create. So these PPTs are not available, but we do upload these videos on our YouTube website. So Mr. Manas Ranjan Nayak, you can actually go through all these videos on our YouTube HDFC Securities YouTube page, and there you can refer back to all this information. What is to be inferred from rollover data? That is the question from Mr. Nayak again. So rollover is nothing but the position, how many positions are actually rolled over to the next month from this month. That data is analyzed using the rollover data. That tells us where traders are maximum interested. Where is the activity going to be? Because if there is a lot of buying and selling happening, that's where the volatility is likely to be. So those data is useful to identify which are the stocks which are there on the trading side. That's where maximum volatility is likely to happen. And if price is rising and if rollover is positive, that means more and more people are rolling over their position. That means that the strong hands are actually bullish on that instrument. That's how you can use the rollover data, Mr. Manas Ranjan. Mr. Samir Sharma is asking that seen from last few months that wherever the global markets are positive, most the Nifty goes down at the day of expiry. What's the reason? So usually Indian markets are preempting the global news. So if global markets are going to go down next week, usually we preempt it this week, and that's why our markets usually trade much before the global market. So actually Indian traders are able to predict, able to preempt such moves. So you should not pay much attention to global market unless it is more than few percentage movement. 2 to 3% move, it is usually discounted in Indian markets. Mr. Ganesh is asking when are we going to add trailing stop application? So we are revamping our digital properties, and um, a lot of changes are on the unveil. Over the next couple of weeks, a lot of new digital properties will be unveiled. So Mr. Ganesh, you will be able to get a lot of features which you are looking for. Ankita is asking, I'm new to the trading and the manual. So yes, we have a lot of videos on our YouTube website, YouTube channel. Please search HDFC Securities channel and go through various educational videos which we keep updating on our channel. From last 2 years, there are a lot of educational content available on our YouTube channels, on our social media, on our website. You can use them to learn basics about trading. All right, so that is the end of the questions which are available on the webinar. Okay, so that brings me to end of this webinar. To conclude, we continue to remain bullish on the markets. 17,500 should be the stop loss for long positions, and 41,000 should be stop loss for the bank Nifty positions, and continue to remain bullish on the markets. That's all for this webinar. Thank you. I thank you all for joining, and I hope your trades are profitable. Thanks, and we can close this webinar.